Good afternoon, Tony Miller. How are you today?
Good, Shawn. How are you? It's great to see you.
Oh, you too. You too. It's been a while. Doing
Yeah.
doing great, man. And Tony, welcome to Lending with Purpose. This is a live stream podcast that is all about empowering you with valuable information, resources, and engaging conversations like we're going to have with clients and friends
Yeah.
that help you navigate the world, not only the world of lending, but enhance your life. Welcome today to Lending with Purpose.
Thank you, Shawn. I appreciate it. I appreciate being here.
Oh yeah. It's going to be a great conversation. So real quick, I always start with a little story, and I was thinking about the use cases for something like a reverse mortgage. Uh, I was approached a few years ago by someone as a senior. Their house was completely paid off. Really great home in Washington D.C. that they've owned for 50 years, I think it's been, and you could only imagine what that house was worth. And so the conversation went, Tony, similar to this. They reached out. The father of the family was in having to get some home health care, and the cost of that health care, I think it was like $10,000 a month or something like that. Or no, they had to put them in an assisted living facility. That's what it was, assisted living facility. $10,000 a month, and they were trying to figure out how to make that work. The retirement money and was being mostly used. So father had retirement, the wife, which is the person that reached out to me, his parents, they were using all of their income that they were getting from their retirement, and it was really difficult. His mom was very stressed out. His family was very stressed out, and what do we do? And so we ended up looking into reverse mortgage, and what we were able to do is to do this reverse mortgage for them, take that money out, use the money, the monthly annuity, and you can get more into it because I don't profess to be a reverse mortgage expert. And we were able to use that, Tony, to pay these exorbitant fees that they were having each month for the healthcare. And so there are many uses, I'm sure, that we're going to talk about today for a reverse mortgage. But when I was thinking about what I should talk about today, I wanted to tell that story because it felt so good to be able to get them into a much better situation to help their family, and to also to be able to keep that house as well inside their family. And we didn't go all the way up to the max, and it was manageable for them. And the mom wasn't so stressed out. She was able to keep the retirement money that she was having to do some things for herself and travel and things like that. And it just felt really good. And so, with that said, go ahead and introduce yourself. Tell us who you are, what you do, and then we'll get into our conversation.
Yeah, I appreciate it. And those are stories that we hear quite a bit in our space, the reverse mortgage space. So I'm happy to talk with you. That's why I'm on Lending with Purpose right now. So I appreciate it. I'm Tony Miller. I'm with Open Mortgage Reverse, and we provide information and proposals and specific details to every individual that we talk to who may qualify for a reverse, so that they can make a decision about what is simply just a mortgage. We'll get into that. I've been in the area, Washington, D.C. metro area. I've lived here my whole life now, 56 years. I enjoy the lending space. I've been a mortgage lender for 31 years. I've been doing reverse for the last 10 years, and it's just been so rewarding. All my kids grew up here. They're all off to college. My wife and I met just as we were entering college together, University of Maryland, so we're proud of that. Basically a hometown guy. I work with an organization. We're local. We're boots on the ground. And yeah, that's my background.
So let's get into it, man. Like, what is a reverse mortgage for anybody that doesn't know? What's a reverse mortgage, and then let's also dispel the myth about it as well. talk about pros and cons, things of that nature. But first, let's start by telling us what a reverse mortgage is and how does it work?
Yeah, so a reverse mortgage, very simply put, is another mortgage. Okay, it's a mortgage. I know you are familiar with traditional mortgage financing. When you own a home, oftentimes folks buy a home and they take a mortgage to fill in the gap between the amount of money they have and meaning their down payment, and they take a loan for the rest. It is a security instrument on your property. That's all it is. It's a lien. And that's what a reverse is. A reverse has some benefits, though, that other mortgages don't. And it is only available to certain homeowners, right? Homeowners in Maryland specifically, you need to be 62 years of age or older, and you can obtain this program, or at least information on it, called a reverse mortgage or a home equity conversion mortgage. It will allow you to access the equity in your home, which may be dormant. You haven't used it before. Maybe you have an outstanding mortgage and you want to get that, paid down and manage the payments better, so you refinance. If you do it with a reverse mortgage, I would say one of the benefits of it is that it allows you to take the financing, and it improves your cash flow at a bare minimum, because FHA does not require you to make a principal and interest payment. So as homeowners, we always have to make our real estate taxes and homeowners insurance and maintenance on the property, whether we have a mortgage or not. With a reverse mortgage, the benefit is I can borrow these funds, I can do all the things that I need to do with it, but I don't have to repay it as far as principal and interest is concerned. So no monthly mortgage payment. I would say in a lot of different ways, that is a reverse mortgage. It's very simply a mortgage program secured against your home.
Got it. And so you said 62 years to be eligible, right? Those are what are some of the other eligibility requirements?
So some of the other eligibility requirements, when you qualify for a reverse mortgage, it's age-based, right? You have to be 62 plus. And then the amount that you qualify for is based on the value of your home and where current interest rates are. In fact, the higher the interest rates, you don't qualify for quite as much, okay? Lower interest rates, which luckily the market's turning right now, and we may see lower interest rates, dramatically lower here next month or so, then you start to qualify for more. And in our space, the older you are, you qualify for a little bit more. Some of the qualification for it, again, 62, and we kind of do what you may be familiar with, which is a VA residual income calculation. And that's it. We just look at how much money you're going to have at the end of the month after you pay your bills, your taxes, your insurance, your utilities. At the end of the month, if you meet a requirement for residual income, then you're generally going to qualify for this loan. We don't have a specific, in the world of the FHA insured HECM program, which is the reverse we know, we don't have a specific credit score requirement. And we also have programs in place that if you've had some issues with credit, we can help you with financing, what we call set-asides, to make sure that your taxes and insurance and everything will be paid going forward. But qualifying is simple: 62 years of age or older, and you own your home and you're going to occupy it. Got it.
And then what, in regards to that, so you don't have a mortgage payment on this house, is that right? So I do a reverse mortgage on my home. I don't have a mortgage payment on it. Like, really, like, break that down into layman's terms, like what that really means, like to number one, to the homeowner, but also like the family or the heirs. Like I told my story and my situation, like from a homeowner's aspect, because she didn't have a mortgage payment, right? This reverse mortgage allowed her to take equity out of her home without having to pay anything back to the mortgage company on a monthly basis, right? And then they were actually paying her from the proceeds from what she took in the form of an annuity. Am I saying that right? Like, how would you explain that to someone that really wants to know the sort of overview? Like, let's get to the point. Tell me exactly what this really means to me. How would I explain that to them in regards to a payment?
Yeah. So we could take your example. She didn't have a mortgage at all,
Right.
right? So then the conversation was, what is it that she needs to keep moving forward? It turns out she needs in-home care uh, money, if you will. She needs to be able to pay for in-home care without depleting all her retirement assets, because eventually those are going to run out. And what is she going to do, right? So a reverse mortgage in that case was set up effectively as a line of credit, okay? And the monthly distribution to her, which could have been a lifetime tenure, which means whatever amount of money it was every month that was dispersed to her out of the reverse mortgage, would have kept going for the remainder of her life in that home. There's no term on it, okay? And it's available because she had X amount of equity in her home. So let's say her house was worth $1 million, right? And we use general terms and say she qualified for a $500,000 reverse mortgage, which is right about in that area where she probably, that's the amount she would have qualified for, okay? That 500,000 is worth to her either lump sum, like she needs to take some of it right away to pay bills, or maybe she had a small mortgage and she needs to pay that off. I know she didn't in this case. Or maybe she needs monthly distribution of income. And what FHA does is ensure that any way that she takes the funds, there's no required monthly payment, okay? So she is taking a loan, and that loan is secured against the home. The interest and insurance, there is FHA insurance like any other FHA loan, accrues on the balance of the loan over time. If she took income, monthly distributions, then she has a very small amount accruing, based against that $500,000 availability, okay? And that will continue and continue and continue and continue for the rest of her life, because that's what FHA has determined in one of the uses of the reverse mortgage. They will allow it to occur as long as you own and occupy the property while it's happening. Generally, in other situations, you have a mortgage balance. Somebody wants to refinance. So they would basically come in and say, I'm looking to refinance. I want to save as much money as I can possibly every month. So they refinance, pay off a $250,000 loan with a reverse mortgage. Now, they're not required. They get rid of the mortgage that requires $2,000 a month, right? Principal and interest. But they're not required to make a payment on this loan. It's a longer conversation from here, but if they wanted to manage this like any other mortgage, they could. That's another misconception, is people they think once you're in the mortgage, you can't make payments on it. You can pay it like any other mortgage, right? There's no prepayment penalty. But most people take the benefit of not paying it, let it accrue over time. For the heirs, let's say years down the road, the borrower has lived a good life, stress levels down, right? Because they found a source for this money. And now their loan balance has grown. Well, when they pass away, whatever the loan balance is, like any other traditional mortgage, the heirs can decide that they want to take that over, basically buy it out, refinance, or they can sell the home. And when the home sells, the mortgage will pay off, the reverse mortgage will pay off, and they'll take the proceeds. So it acts like any other mortgage, really, and it's secured like any other mortgage. There's a little bit to the security that's different, but it's secured like any other mortgage. And it has some special features for our senior borrowers. That's really it.
Got it. So, Tony,
I think
I'm
I
gonna
answered
lose my house. No, you
You're gonna-
did. So I want to move on to the next part of this.
Sure.
It's my parents. I've heard so many bad things. You're going to take advantage of us. I'm going to lose the house, or our family's going to lose the house. You're going to take it from us. Also, it's going to affect my family's estate and inheritance. Like, how does that all work when you're having those conversations? Like, where'd that come from, and why are we still talking about that? Because I don't think a reverse works for everyone in every situation, but it can help a lot of people if we fully understand how it works. And so when you have, anyone that I've ever done, I've done like 2 or 3 of them my entire career in 20 years, right? And so more often than not, uh, there's the homeowner that wants to do it because they think it's a great idea, and then the heirs of the family doesn't think it's such a great idea, or they're not prepared to take ownership of the property, once the mortality happens. Or can we speak to that?
Yeah, absolutely. So there are a lot of assurities with the reverse mortgage. Again, it is insured by FHA. FHA basically is an insurer of this program, not a lender.
Mm-hmm.
They're an insurer. We lend on this program, and FHA has been involved since 1989. Okay, and they've tweaked the program every chance they get to improve it. So you have a borrower in a situation who could use a reverse. They know something about it, but they've heard all these bad things. They've heard what we call misconceptions, myths. The biggest issue, I will say, in our industry is preconception. People just hear from their sisters, brothers, cousin, or whomever that, oh, you can't do a reverse mortgage because the bank's going to take your house. That's false. You can't do a reverse mortgage because, you're just going to lose everything. All the equity is going to go away. That's just not true. Okay. So a lot of what we do every day is try to overcome this through conversation and providing information. When you take a reverse mortgage, if you take one of the bigger benefits, meaning you borrow all the money that you can, and then you don't pay it back, then the mortgage balance will accrue. But the program is insured so that a borrower will never owe, this is important, a homeowner will never owe more than their house is worth. Okay. That means that when they exit the property, let's say they pass on, because we're talking about the heirs, the estate. When they pass on, they will never owe more than the home is worth. Okay. And in fact, there's an assurity insured by FHA that if a direct heir wants to take the home, in the case of, say, a down market like we had in 2008, where houses flipped upside down, right? The direct heir will oftentimes only need to pay 95% of the value or what is owed on the property to get the home. So there will always be some equity there for them. Okay. In many cases, we don't even get to that level. In many cases, the borrower, who's the true beneficiary of the program, they're the ones that are looking to stay in their home. They're the ones that are looking not to be a burden to their kids. They're the ones that, don't want to have to move anywhere. So they use the program, and they use it as long as they possibly can. And the remainder, any equity left in the property in the end, which generally there's a lot because it doesn't get to that full utilization often, that goes to the heirs. So there are provisions for that. And I think the myths and misconceptions that you touched on are really what hold people back. We get often people call, they know the program can work for them. They know just enough. But as we're talking through things, they're talking themselves like, I shouldn't do this, right? I shouldn't do this. And they're looking for the help, but they've had so much bad connotation. We go a step further. I do, my team. We bring in the heirs. We bring in any sibling, any daughter, any niece who is important to our borrower. And we ask them to get educated on the program with the borrower so they can make a decision about whether this is right for them. Sometimes we've had borrowers in a funny way say, nope, I'm doing it. I'm going to do it, and I'll talk to them about it later. And that's somebody that knows what they want to do and how they're going to go about doing it. And all we do is provide the information. So does that answer
the question? Yeah, absolutely. And so what's the process when it comes time to settle the account, right? Because if the homeowner is no longer with us, then the payment is due at that point, right?
Not to anyone involved. If effectively to give you
what I'm getting at is, how do you settle the account, number one, and number two, how long do you have to settle the account? Like, what's that process when that time comes?
Okay, so homeowner passes, they're gone. Now we don't have a borrower. FHA says to the servicer, like, we have services out there just like traditional mortgage servicers. hey, the borrower's passed away, we need to disposition this loan, meaning how's it going to be handled? This is where an FHA servicer is set up, I say a little better than traditional, because they're now in contact with the family, with the heirs, with whomever owns the property. They basically get an appraisal on the property. It's paid for through the servicer, and they determine a value. And they ask the heirs, literally on the phone, through paperwork, however it is, what do you want to do with the home? And the heirs have options, okay? All this happens very quickly as soon as the servicer is notified that the borrower has passed. Initially, you have 90 days to work with the servicer. You're easily going to get another 90 days, so you have 6 months, okay? And at 6 months, if you're actively communicating with the servicer, I'm the heir and I'm communicating with them about my parents' property and what I want to do, you can have up to a year to work on dispositioning that property, okay? As long as you're actively working on it, no one has an issue. The servicers are required to sell the home, so yes, that's a process. But in the reverse mortgage space, we're used to having these conversations. And at that point, we're asking the heir, say they own the property through will, so they got a will and they own the property. Would you like to own the property? Yes. Well, here's how you can do it. Would you want to sell the property? Yes. Are you going to sell the property? Heck, they might say, well, I'm in California, my parents are in Maryland, and I really don't want to have anything to do with it. The answer then is, thank you very much. You don't have to have anything to do with it. The property will be sold, and I'm going to use a bad term here. It'll be sold by foreclosure, right? Because an institution, a corporation, their only way of selling a residential property is through a vehicle called foreclosure, okay? So they would then say, okay, you're not obligated to this. They would foreclose on the property. It's nothing to the heirs. It doesn't bother them. They sell the property. Whatever they sell the property for, proceeds go to pay off the mortgage balance at that time, just like any other loan. And then the remainder proceeds would go back to those heirs, even if they didn't want anything to do with it, okay? So in general, that is meant to say, in a very detailed way, it's not a difficult process in the end. It's a secured mortgage against a home that's either sold or refinanced, and that's it.
And what's the biggest advice that you would give to me? I want to do a reverse mortgage for my parents. What do I need to be prepared for? Because essentially I'm going to have to refinance the house into my name or purchase that home. Is that right?
So you're talking about, in the end, what do you have to be prepared for?
Yeah, in the end, what do I have to be prepared for?
Yeah,
I just received this house by will. And
that's
maybe
right.
I am, well, I don't think I could be on the deed anyway while they're living, if they're the borrower, because I'm not
That's
62, but once I inherit the property, what advice would you give me to be prepared for this?
And I'm answer that specifically. First, I'm going to say borrowers, married couples, for example, they're married, they own a home. Not each borrower has to be 62. Okay, there can be a younger borrower. We can get into that another time, but at least one of them has to be 62. In other states, the age is as low as 55. Okay, so it varies from state to state. What happens in the end with you is you own the property. It's yours. You make decisions about it. You decide, hey, I want to own this property. So you can effectively purchase it, or you're going to refi, really. But you're purchasing it because you're not on the title, okay? And you get the home. It's yours. You're going to purchase it for the loan balance, whatever that is, unless the loan balance is higher than the value, okay? This is the non-recourse feature. House is, worth 500, but your parents now owe 550. Let's just say, okay? Well, they owe 550, and you're thinking, I don't want to pay 550 for a house that's worth $500,000. You don't have to, because FHA insured your right not to. In fact, you're going to get that house for $475. So you're getting it less than value if you want it. If you don't want it, you can just sell it. And as soon as it sells, in that case, there's no equity. So it just pays off the mortgage and everything's done. Does that help?
I see. Yeah, it does. It does. And so, actually, last question: Can I,
Mhm.
uh, for reverse mortgage, can you purchase a home using a reverse mortgage?
You can. It's called a HECM for purchase, or H for P,
Hmm.
and it's been
Hmm.
around since 2009, and it effectively works the same. Let's just use 50%. You've downsized, you've sold your big home, or, your empty nesters. Everybody wants to right size now and get into something that's easier living. So their solution is, I'm going to buy a new place with all the things I need to live out the rest of my life. They take the equity they have and they go buy a home. But instead of putting all that equity into the home, they maybe make a 50% down payment, keep the rest in their investments, and they take a reverse for the difference. So 50% down, 50% reverse, and they've effectively bought a brand new home without having to have a mortgage payment.
Ah, I see. I see. Um, I didn't exactly tell the truth. I have one more question.
Sure.
How how would you tell someone to ensure that you're getting like a fair deal and to avoid, predatory lending practices? I remember my grandfather, he would bring these opportunities to our family all the time because people were calling on the phone and they had convinced them that it was such a great thing. And
Right.
it's just, you don't know who to trust sometimes. There are some predatory lending. I know you've been doing this for long period of time. You operate with the highest level of integrity and character,
Thank you.
but not everybody's like you. So how do we ensure that the seniors are getting a fair deal and avoiding the predatory lending?
Yeah. We have a guiding body named NRMLA. It's National Reverse Mortgage Lenders Association, and you can
Hmm.
see a list of lenders there. You can also go to FHA's website, and they have a list of reverse mortgage, if you will, lenders. I think one of the best things you can do is talk to your trusted advisors. If that's family, that's great. If you actually have an advisor, that's great too. If you have a mortgage specialist like yourself, who you've developed a relationship with, talk to them, because they're probably going to know someone like myself who's a specialist in this. And they're going to, that's the way to do it. You're talking to people you know, and they're referring you. Um, I will go a step further and say that in reverse mortgage lending, you're required to get counseled. Any borrower who takes a reverse mortgage must be counseled prior to actually taking the application, which is a great thing because the counselor is third party. They have nothing to do with the mortgage company. And they're another kind of checkpoint to make sure that it's no predatory lending going on. Okay. Uh,
Mm-hmm.
but I would say it's trust who you know, and get information. If someone's trying to sell you a reverse mortgage, they're not really working with you in the proper way, because we don't sell the loan. We present, give information, have a lot of conversations, 2 to 4 hours of a real conversation with folks before they even apply. So there's lots of ways to feel it out. I think, once you're on the phone with someone and you talk to them, if you want to deal with them or not. There's that too.
Got it. Got it. Got it. No, this is great, man. This is really good information. I think we'll
Awesome.
at some point have to do a part two
Great.
because there's so much more that we can unpack. But I think it's something that we definitely need to consider out there. It's a vehicle. To help a lot of people. But
It's an
so
option.
Tony,
It's an option.
yeah, definitely an option. So how can we help you? Number one, number two, how do we connect with you as well?
Yeah. So uh, advocating for the program because you have the information is one of the biggest things you can do to help. In other words, any borrower who meets the age requirement, or anyone you think may meet the age requirement, that you're talking to in the traditional world, and I'm talking to all you traditional mortgage loan officers, this should be an option on the table to at least compare and allow the borrower to make a choice. That'd be a huge help. Financial advisors have come around the last few years to a really good understanding of the program and all that it can do in retirement, which is a whole nother conversation. And I think just advocating in a positive way for the program is number one. My phone number is the best way to get a hold of me. I work with Open Mortgage Reverse. So I'll give you my email and then my phone number if that works.
Yeah, yeah.
It's Tony Miller at openmortgage.com, Tony Miller at openmortgage.com. And my phone number, which I've had forever, is very simple, 301-252-2121, 301-252-2121. And I work in reverse.
You make it so easy. So Tony Miller at openmortgage.com. That's an super easy email address. And then your phone number, just as easy. Yeah, just as. So thank you for that. And I'm gonna pop your we're gonna pop your phone number up there too as well. So if you need to get in touch with Tony or you want to just email him or give him a phone call. So here we go. Last question, and then I'll let you go. Carry on with your day. So, Tony, you get one question. I apologize. You get one person, one question. Who would it be, and what would you ask?
I have a friend that I would ask. They're still living. I would just ask them, what could I do in my life to be of better service to them and be a better friend? So that's my question.
It's a great question. It's awesome. I think a lot of us should be doing that anyway. Just in general, I know I'm gonna be very conscious of doing that as much as I possibly can with people. But yeah, great question. I hope you get a chance to ask he or she that question. You said he?
I'll say it could be anyone that is a close friend of mine. So
okay,
I'll go with that.
Okay.
Very general person, but specific to me.
Understood. I hope that happens.
Yeah,
So as everybody knows, I say it every week. It'd be just such a shame for me to know people like Tony and not share him with the network. It's just super important. If there's anything that I can do in any way to help you, please don't hesitate to reach out. Everyone remain as safe and as healthy as they possibly can. And, we'll be here next week. And Tony, we really appreciate you spending time with us. This was great today, and it was really good information. And I think it's going to be something that everyone can refer back to and use in the future potentially.
Great, man. I appreciate it so much.
Yeah. So I'll ask you to hang on with me for just another minute. I'm going to close out, but thanks again for the opportunity. Thanks again for everybody listening, and we'll see you next week.